Good morning, guys. This is Thursday, October 5th. So basically, 2023. So basically, this is my primary view here for the markets. Okay, I'm going to go through each of these charts individually. Uh, Try and make it as quick as possible. So some things I'm looking at right here. We're currently into the volume void of two volume distributions that have developed this week. So we started the first part of the week up here in this higher distribution. Okay. And then there Tuesday, we completely broke down into a lower distribution phase. And we're currently trying to find value in the middle here on the ESs. So just heads up on that. 4282. Yeah, 4282 is a very critical support area for the bull case in the markets. So be mindful of that. We've come down already pre-market here around 5 o'clock. Tested it, currently trying to bounce off of it. So obviously you would want to be trying to go long here. Right up here was last week's close. So there's always a chance that we can come we've hit the 200-day moving average in the after hours on ESs. So, and now we are showing signs that we're bouncing off that. Okay. So far, what I'm seeing this morning, we held support. We're bouncing off of critical support this morning. This is much more weaker structure than what we have on the Nasdaq, and the move off the bottom here did not seem impulsive. Typically, if you have a wave 5 completion pattern, yeah, you would expect an impulsive move off the lows on the ESs, and we didn't necessarily get that. It was more choppy, indicative of a wave 4. So definitely keep that scenario on watch. If this was a wave 4, coming down here to the 4230, 4220 area, that would be a primary target to finish a wave 5. And the structure suggests we still need to complete lower, but that's hard to say if that's going to happen. Another thing, we are still below the yearly VWAP, so institutions should be looking to sell into strength. So that's definitely keeping on watch. Another thing I want to point out here. So we came up to a critical pivot area, and we were rejected yesterday afternoon. Uh, uh, and So that's another thing to think about. And this line right here represents the current trend. We are back testing that current trend. So we broke down a critical trend. If you go out here on the daily, and I'll show you real quick here. So we broke down a critical trend line, and we haven't even gotten back above that trend line. So just definitely keep that in the back of your mind. All we've managed to do so far is come up, back test it, and we're fading away from that back trend. So, be mindful, the risk reward technically, the closer you get to that back test, the risk reward technically would be to the downside. So just be mindful of that until we start getting above yesterday's highs, and starting to find value. So ideally, the stronger the open here, the more likely the bullish scenario. But the risk reward, in my opinion, is still to the downside coming into today's trading session. Okay, NQs real quick here. Okay, so basically what we have done here on NQs, the Monsters Attack were the last to fall, and they were the first to rally. Okay, what we did yesterday is a little bit more impulsive on NASDAQ. So, so that makes you lean a little bit more to the bullish side, because we not only we have a void area. We came down to the void area like we did on the S&Ps, but we came out of this void much stronger than what we did on the S&Ps, suggesting this might have been an exhaustion sell-off on the Nasdaq, and that gives us a double bottom on the NQs. So we did not complete a 5-wave structure on the NQs to the downside. So just keep that in mind. If we were to complete a 5-wave structure and get back to where we should technically finish out here, that would be way down here, the 14,420 area, something like that. That would finish out a five-way structure on the NASDAQ. But it is showing some relative strength. Okay. This move up, this would have been our expected area for rejection. We overshot it. And what we did to complete a wave 4 structure. So what would have taken us to the very end of a wave 4 structure for a continuation to the wave 5. We got that right into the close yesterday. So this is the most extreme read for a wave 4. One of the most extreme reads. We can go a little bit higher, but this structure suggests that uh, uh, that we might be starting the wave 5 down. But because it came off so strong, I don't know. I'm not very confident in that trade. Okay, uh, so we're holding very critical support on the ESs and still holding critical support on the Nasdaq. So basically, if we take out yesterday's highs today, then that's going to negate the five wave structure to the fifth wave to the downside, and we have to start leaning strongly to the bullish side. So just knowing that taking out yesterday's highs, that's really going to give us a really good clue to the bullish scenario going forward. Okay, so and I do want to point out, we had, like I said, two voids. We had a two volume distribution structure, and we came out of this lower volume structure on the Nasdaq very strong. Okay. Other things on the bullish case here. So we're holding. We needed to break back down here for the bearish case on the bonds, and instead of breaking down this, you see right here on your MACD, you see how your moving averages. This we started seeing divergence into this move to the downside. This suggests an exhaustion move down, and this was a very critical supporting area for the bonds. So we got an exhaustion wave right below that area, and now we're back into that supporting area here on the bonds. Another thing, what I'm seeing right here, the moving average are coming down, okay, but price is not migrating with it. This suggests to me that we have uh, supporting prices. They're coming in here. Unlike this entire move now, they are trying to support the bonds. That's what I'm seeing right here, that we are initially seeing signs of bond support, which for quite some time now, we have not seen. So there's two little things going on here. This could be an exhaustion wave down, and now we're actually starting to see value buyers step up into the market and trying to get this back up to the 2008 lows or greater here on the bonds, TLT bonds. So let's just definitely keep this on watch. This suggests, if this narrative has changed, suggests a little bit more bullishness in the overall equities, in my opinion. Okay. Next make so. If you go out in the daily, so we've been fighting on the VX real quick here. We've been fighting this 200-day moving average. Okay. So that's where we're currently trading on the VX futures, right around that 200-day moving average, fighting it. Go back down to 20 real quick here. What I'm looking at here, you see how when the moving averages are going up, we're getting price go up, moving average goes up, we got price going up, okay? Moving averages are going up. So we're getting a pretty substantial move up in our moving average, but price is not migrating higher on the VX futures with the moving averages going up. This suggests to me exhaustion and taking on the VX futures to the upside here at the 200-day moving average. And this suggests to me this could be bullish for the markets, that everybody might be hedged to the max already, and that I'm not saying VX futures are going to come down in any meaningful way, but I am suggesting that I'm seeing exhaustion in taking on uh, uh, additional VX futures here. Important to note also, things really start getting out of control whenever you start seeing the front contracts priced higher than the back end contracts. Okay, or and what we currently have a situation going on here on VX futures. Um, uh, we do not. We're still in contango, so that leans a little more bullish to the overall structure of volatility. Bullish to overall structure of the markets versus volatility. Other things that I'm looking at here in the overall pre-markets, BABA, Rivian. So these Chinese names are getting hit today, but you have to keep in mind China's on a holiday. So you're seeing any type of data out of China that's not looking good here. You pretty much you can't really read much into it. Their country's on a week long holiday, and so what am I really looking at here? I'm not seeing any monsters attack even showing up on the scanner here. So that's, if I was going to be bearish coming into today, I would want to see some sort of news or headlines driving down Megatech. And I'm not seeing that today. Okay, initially this morning. So other little developments that I'm seeing in the market today. So the 2 year is slowly crossing back below the 20 year here on the uh, and so the yield curve has been inverted for some time now. So we're starting seeing meaningful signs here that the longer time frames are starting to invert back to a normalized status. And typically, bear markets do not typically happen until the yield curve is back into a normalized status. Okay, so one by one, we should start seeing these longer term maturities, the yields actually get normalizing where the long-term yields are actually higher than the short-term yields. And I even noticed yesterday we had a bigger crush on the front end than we did in the TLT. So I got another chart I can show you real quick. Give me a second here. I use this chart here to track the 2 year versus the 10 year treasuries. And so basically we're slowly but surely crashing down here. The front end is coming down, but the back end's holding up better. And what this is, once it gets down to zero, that puts you back in parity. Normalized, a normalized state is down here in the negatives. That's a normalized state for your bond yields, and long-term maturities should always be longer, valued more, have higher yields than the short-term utility treasuries. And so we're slowly but surely getting a resolution to the downside. Okay, another major development happening today. We had a inventory read 25-year low for demand this past week for crude oil. So I don't know if it's been artificially manipulated or not. Sometimes they'll keep those ships offshore stacking up to drive down prices. So I don't know if that's the case or not. Um, or they'll bring in more ships. They've had ships sitting out there and they're bringing them all in at once. To build up the inventories to give the illusion that things are better than what they really are. Okay, so just definitely keep in mind that's some of the manipulation. But we have major issues in Europe, major issues in China and Asia and stuff like that. But they stay in a 24 5 year low. And so that when you hear stuff like that, uh, you see it as consolidation area. So this looks like a head and shoulders, in my opinion. So, if this continues on, you would have to think that we might be coming back down to the $66 range here on crude oil as we start to refill our national reserves. So that's the only problem I got with any type of sell down, because we don't have full national reserves. So there's going to be a natural bid next year, all year long, to rebuild these reserves, because Biden said we weren't going to rebuild them. So, and just definitely keep that in mind. going forward here, that crude. And then we also have wheat and corn. We even have the field right next to my house. It had a bumper crop this year because of the way the rainfall was hitting and the weather was hitting this year. Uh, so we're going to have collapsing values in wheat and corn. China came, or Russia came in trying to dump a bunch of wheat into the market, and then other Baltic nations came in, started undercutting Russia. I can't remember what the wheat ticker is, but so these are all deflationary things, technically hitting in the market, so definitely keep that on watch. So uh, I think long XLE is probably in serious jeopardy. Uh, so this one here looks like we're probably going to break down here in the not so distant future here on this trade. Uh, edit. Extend to the right. Yes. On. Boom. So this uptrend, massive uptrend we've had in crude in the energy space, I'd be really leery that energy could be under some pressure. There are quite a few energy names on the Nasdaq and the Russell. There's quite a few on the Nasdaq, but you still got your monsters of tech holding the Nasdaq all together. They're the ones that really matter. The magnificent seven names. And this morning, I'm not seeing anything that suggests those names are in trouble. Quick rundown of them. Meta looks ready to break out of the wedge. Telecommunications is doing very well right now. Google, very strong. Could be up in the 140s here in the not so distant future. Looks like it's going from wedge low all the way to wedge high potentially here. Apple and Microsoft were showing relative weakness. These are the ones you'd be looking forward to squeeze as hard if we decide to take off higher here. We are back above critical support for 2023. Uh, you know, it's like a magnet back at the 175 if we don't see sell side action for Apple. Microsoft, uh, resistant. Microsoft still showing a little bit of weakness here. So just keep this one on watch. That's all I can say. We're above Friday's close, and we're right into a critical pivot area, trying to decide to go higher here. So I just keep an eye on Microsoft right here. Put trend line right there. See this morning, Microsoft potentially breaking it above this trend line right out of the gate this morning. Tesla, really strong pattern here on Tesla. We're trying to push out of a long-term downtrend line. We've done it before, but it has failed. This is a second attempt to break out of this long-term downtrend on Tesla. So keep this one on watch here. NVIDIA. Been showing relative weakness here lately on NVIDIA. So we'll just have to keep this one on watch. So I can say. It has a magnet back up to the 450. So be mindful of that. Possible $9 move back up. And it is above last Friday's close as well. It was showing relative strength last Wednesday. There was somebody coming in holding price on the video while the rest of the market was in free fall. So that's definitely a big takeaway going forward. That early on we saw signs that Nvidia was being supported. AMD over 100 is being supported. We are trading currently this morning above a long-term downtrend line. I don't know if it's going to mean anything. I just know that typically this could be a breakout area. So we're still not above the head and shoulders. We're still below the pivot. Could be very, very quick move to 105 this morning. And I'm missing Amazon. Really just not. It's right there. There's really no edge, in my opinion, for Amazon. Okay, that's all I got to say. Thanks a lot. Be sure and like my video, please, on YouTube, and write any comments below if you see anything. And if you guys want to join our trading groups, that's fine. Everything's free, so just DM me, and I'll let you in.